Hey traders, Options Center here. I just want to do a quick video, show you what I'm looking at. We remain bearish on the market, but just to during this holiday season, we may get some drift up. We may, we've dipped so far, but maybe tomorrow and Friday we're off on Thursday. Just a reminder, we may drift up a little bit. So I'm looking for some at least bounce plays to I guess hedge our our bearish trades. So Roku has been one that I've been trying quite a few times, and we took a last flush here. I'm on the 65-minute chart. It is a custom chart. It's not your hourly. It is 65 minutes, so the each candle is even throughout the trading day. So we had our flush here, a 5-wave move down. We didn't know if the wave was done right here, that we got our last 5, but it appears that we had our wave 5, 4, 5. That may be confusing, but to end this move to the downside, just missing that options expected move for the week. And so looking closer, we have all this divergence here. We continue to form bullish divergence, and so we're just looking for a nice bounce, not necessarily going all-time highs or anything. A bounce like this, a bounce where we get a 3-wave move up. I have that labeled wrong, before heading back down. And so right now we took on a play for Roku, and I just want to show you what a 1-2 setup is. So let's go down to the 15-minute chart, get a little bit closer here. The 5 minutes on the right. This is our 5-minute chart that I use for day trading. It only gives us the day, the real-time trading. That's what the lines here, those are our trading ranges for the day. Yesterday's trading range was here at 238 and down here at 223. But really what I want to show you down on a 15-minute chart was this 1-2 setup. What is a 1-2 setup? I know a lot of people ask me, and it's where we take where we think the bottom might be. You have an impulsive move up. It's really small here, so it looks impulsive, but we can't count the 5 waves in there at this point. So it appears that this is a 5-wave move up, and then you have a corrective wave 3 that comes back from. Let's take your retracement tool. I have it set with a few different numbers on there. We'll enlarge this a little bit more so you can see it. But you take it from the bottom of the potential wave 1 and to the top of the potential wave 2. You take off some of these numbers. All I'm looking for is this golden zone, the 618 to the 786 there. And so it came right down to that 786 area and started to get a little bit of buying pressure. So not impulsively right now, but what would happen if the market may be putting pressure on this right now, but what would happen with this would be a 1, 2, and we're looking for an impulsive wave 3 that would bring us probably around this point of control or more up. So we're definitely looking at this to be a play, and it could be doing a very, very minor 1-2. It's all fractal. So this is a 1-2 and possibly really small 1-2 before heading up for a higher degree wave 3, and then you get a wave 4 and a 5 to continue up. So the wave 1, 3, and 5 are impulsive moves up, and the wave 2 and the wave 4 are your corrective waves. So we're looking at that, and then it is invalidated. Wave 2 cannot move underneath wave 1. That is against the Elliott wave rules. So if this move gets down past this 23.23 area, then it invalidates and we're stopped out. This is no longer impulsive wave 1. We're going to continue down, and then we try again. This is a really good setup. It's real easy to know when you're off. So if we get underneath this 223.33, it's an easy hard stop, because even if it's a penny underneath, we know that we're wrong. Okay, so that's the setup we have here. We're gonna hold this overnight, see if we can get this impulsive wave three, and we'll only play this wave three. We're not gonna look for the 4 and the 5 because we're only doing a swing overnight, or possibly at the very latest Friday. But we don't like the theta decay that's gonna come with holding over the holiday. So we'll try to get out tomorrow, unless we see something that gives us the idea that it still wants to move pretty big into Friday, which is just a half day. So the more conservative way to do this would probably be just take the trade off tomorrow and roll it into next week if we decide not to take that trade. Now, for how do we trade this? And so I'm actually using Robinhood on this one, so you're not going to see any of the trades in here. But so for this week, if we don't want any theta decay, we want to be near the money, because we think it's an actual setup. We're not just really guessing, so we can do near the money. But if you think it's going to take a little bit more, if we were trying to catch a knife or anything like that, we would want to go a little bit deeper in the money, so we wouldn't have that theta decay. So anywhere from like the 50 range to 70. Even if you want to be super conservative and take away all the theta decay, but it gets very rich with premium at that point. Then we go to the to about the 85 area. But yeah, so just be somewhere near the money. Don't get way out of the money, because your decay is gonna be so quick. You're gonna be losing money just by waiting for the move. So that's it. That's all I really want to show you. It doesn't look good right now, but we'll see. We have plenty of room before the downside, before our stop is hit. So thanks for joining us here. We will have a happy Thanksgiving if we don't. I'll talk to you tomorrow. Have a good night.